Hello guys, and welcome again to another early waves on cryptos. It's been a couple of weeks since I last did a video. We have another vote from the QIC community, and we are going to see today BTC and also RUNE. Since last time, markets have moved pretty much as we suspected, and of course I know that a lot of you are keen to see what I am I don't want to say analyzing, but what I am probably looking at, what sort of levels are we looking, what sort of counts are we looking, which ones are the main, which ones are the, which one is the main, which ones are alternatives and why, and some targets for this downside leg that we have been seeing since you probably know me. Because the truth is that a lot of you guys think I'm just a perma bear or something, but the truth is that I've been bearish since the 6150 top back in April of 2021. Yes, it's been a while, but the truth is that, we did see another high, obviously, which I didn't expect, but the rest of it has been bearish since. Now, the question is how much lower are we likely to go? And there is two scenarios that we are going to investigate here, mainly in the long term. And both, as well, I might say, are a bit very close to one another to happen. And then we're going to look at RUNE, of course, which has also its main scenario and its alternative. So if you like this video, guys, support with a like, with a share, and leave your comments if you have any questions. None of this is financial advice, as I always say. It's mainly purely educational and to help you make more informed decisions. So let's go on BTC first and then RUNE. And this time I will try to be as fast as I can, because every time I say that I just keep talking and talking. So I apologize in advance if it happens to be the case once again. Right. So this is our main guys for BTC. Okay. And as you can see, the expectation is for a super cycle wave 3, by the way, up here to be done. This is A, this is B, and this is expected to be wave C. Okay. Now, this count, let's say what we like and what we don't like first. We don't like the duration of wave 2. It's very short. And the fourth is okay. Yeah. And the truth is that if the duration of wave 2 it is what it is here, then we might have 3 and 4 here, which means we could have finished already and we might start moving higher from here. But as you well know, this scenario here internally is not like it cannot be a wave 1 and 2 for a full-blown reversal. It can be, but we are experiencing quite low volumes here. As you can see, we see very low volumes, and we would have expected that to be better if we would want to see prices move higher, because we want that to be a support, all this correction down here. So yes, it is possible that we ended down here and we're gonna go full blown up, but the main is the main for a reason. And of course, this is just a few things that I'm mentioning. The analysis I do by myself, it's much more in depth and you don't want to go there. So one case we're done, one case we're not done. I am with the case that we're not done yet. We expect one more wave down. Okay, and that would suspectedly be the A, B, and the C. You know that it's going for an extended wave 3, right? So the level we called last time was around 70.6 or something, which has actually played out exactly as expected. The next level down, it was 1450 or so, guys. But that's one of the ways that we can project where this is heading. Another way would be to use the fourth wave, or the net distance actually through all the waves up to 4, and then we go down to 1520 or so. And as you can see, also the 61 is already a level that prices have already retraced higher and then broken again. So you may consider the 20K quite important, but more important for me, because we're looking at Elliott waves and Elliott wave channels are very important, is the fact that we remain still below this base channel, guys, right? Now we usually see third waves break the channels, okay, but we have here some sort of false break initially. One might also suggest that this is 1 and 2, and that's going to be something like 1, 2, 3, 4, and 5 for 3, and then we're going to get 4 and 5 for A, and then go up for B and then C all the way down, right? Which is possible. It's not impossible. We focus on the 20K as a resistance and then above the base channel, guys. This base channel, as long as we're below that, there is no way of us not going lower, okay? If we stay above the 2150 or so, or the 22, or whatever this descending trend line is going to take us. Now, let's not forget, as we are expecting perhaps either the 14K here or even lower, we might still be in wave 2 here. We might do 3, 4, and 5 lower. And since we are 1, 2, 3, and 4 and done, that could be some sort of diagonal, even one might suggest. But guys, we go according to volumes. Volumes are speaking to us, okay? And this is the reason we have this as a third. This is the reason we have this as the internal structural third. This is why we see a correction here, and this is the reason that I'm expecting one more leg down, okay? Everything, pretty much, not everything, but volumes is one of the most significant indicators that we need to pay attention to, okay? Now, another level, it's around down 11K, and then closer to the 10 and perhaps even 9, okay? Since we used the net distance through waves, and since supposedly the wave 4 is down here as well, the last leg to the downside also shows us the 887, okay? The 10, 1085, 75 or so, okay? And all of these are quite levels. Not quite levels, quite important levels. One of the variations I've been looking, and I'm leaning towards this more and more as the days get past, without that being specifically the 5th, maybe we're gonna get this as a 5th, right? I just place it there, but 1, 2, 3, 4, and 5 if the 4th is done here. But if the 3rd is done here, then we're gonna get one more wave down. So it really is a 50-50 case here, guys, if we do another low or not in the short term for this particular case. Here, I'm looking at 1 and 2, 3 and 4, and 5, which means that's going to be a cycle wave A. We're going to see a very decent move to the upside, perhaps closer to 35K, and then we'll go down for wave C. Now, this scenario, as I've been saying to my paid group as well, it's matching quite nicely with the macro narrative, guys, because the expectation of Fed doing 175 hike again is going to add a bit more downside. And then seeing, because GDP will be worsening, seeing that, okay, people might think, okay, the Fed will take a step down, a step back now. So this is the moment that we're going to see a rally. So I would be expecting something like this, a rally, and then the Fed, there will be a big time of potential, when the recession will start, when fears of recession, real recession will start kicking in, then we're going to see another leg down. And from there, that could be the big opportunity. The question is, for most of the investors here, right? And depends on your capital, of course, what have you got for investing here, right? Where do I go in? Do I go in here or do I wait for this drop? Well, guys, the truth is this, that this, statistically speaking and historically speaking, is not a bad level to get in, okay? It can go all the way up and either fall or continue up, right? So this is your sort of, the biggest question, what's going to happen? Now, the question that you may want to ask yourself is, do you want to risk not getting in here for a potential of another leg down after all this distance, right? That you do not know where it's going to end? This is the question you gotta wait. You gotta actually ask yourself. So this is for the long-term stuff. I want to remind you quickly that we're looking at BLX, and we've also talked about, okay, today is not out yet, but we are looking at a bear market here, guys. Okay, we're obviously in bear market. There's no question, even traditionally speaking, or any sort of 20% of the low. Yes, we are. 50 below the 200 on the daily. Yes, we are. We are in bear market. Make no mistake, we are in bear market, right? The question is, we don't know what type. Is it corrective or is it impulsive, right? For now, it's impulsive, unfortunately, or fortunately, depending on which side you are. We are inside the base channel of waves 1 and 2, coming from, before the bull run started. Okay, inside. As long as we remain inside in this territory, we can go not only to 12, but perhaps, theoretically, we can go all the way down to the base channel, all the way down here, guys. Okay, whatever way we go there. Okay, so in theory, it's possible. I just want to remind you that we're still trading in the initial base channel. We returned there. Now, with this can go here. With this done and this done, the alternative is the main count that we have had for a while, that we're still in wave 4, which becomes, of course, more and more unlikely. We do see volumes increasing here, but it's mainly on the downside. This is an upside one, okay, and we like that one. Yeah, but we see we got another low here. And now the volumes that we get here, they don't really look like, there is much buying pressure, to be fair. The variation of the cycle, of course, is also a W, X, and Y, which doesn't really have much different implications to the downside than anything else. And the other one would be the ABC, and would have an ending diagonal here, right? Which would mean, okay, obviously this is 1 and 2, right? Supposedly the one is not done. We do not want one to be done. We get the fourth all the way up, go up to 25K from where we are, and then one more leg down for an ending diagonal, okay? Contracting ending diagonal, obviously. The question is, can that actually even happen? Hold on, let's just check quickly the size of wave 2. That's a wave 2. So if we do that from here, actually it's not even possible, guys, I'm afraid. The ending diagonal is only possible if it's going to be an open variation, which means the third wave needs to be down here. Okay, so A, B, and C. Just a correction here. Okay, so that's all that. Now let's go on the short term, guys. Short term, it's very interesting. I keep changing these according to incoming data, okay, for the record. So we are currently in wave 4, intermediate wave 4. We expect one more leg down, as we said. Okay, so one of the main counts, actually the main count is this. This is a W as an ABC. This is an ABC as a flat in wave X, and we really wanted this, and we've been expecting this in the group that broke below 62 for a while, because otherwise it wouldn't be really considered as a good X. And then we expect another ABC, a triangle, or a flat, because we're in wave Y. It can literally be anything, which means we're going to stay in this territory for a few weeks at least, okay, in my opinion. And saying this, obviously I expect wave Y to not be really as a flat and an ABC here. I would be expecting perhaps a triangle here, guys. I mean, I don't know, we've seen a lot of consolidating price action, right? That's why I'm saying this. It's just only an expectation, though. It's not based on anything apart from the fact that we're expecting wave Y here, and it has to be anything but an impulse. Okay. So with this particular leg, as 1, 2, 3, 4, and 5, we do not like the fourth, okay, and we do not like this in general in how it looks. But given the volumes that we see, this is something that makes sense for me. Okay, it's been hard to count this short-term structure, guys, by the way. But it fits the C wave of a flat. Although I need to mention, I still don't like it because usually, especially in expanding flats, wave C, it's fast, okay, which means it would be something like this perhaps, but you know, this, it just took a little bit of a long time to take place, right? Now, anyway, we are assuming here that the wave X is done, despite that this is also 5-wave move to the downside, which means probably something like this can be expected, and then we'll go up. So it would fit the ABC or the triangle or something else. But if we continue like this, a correction, by the way, in the short term can be expected anyway. If we continue, we'll get a rejection around 90.50 or below 20. And then we'll go down, breaking that low. Then there will be more chances that our wave 4 ended up here. Yeah. And this is a wave 1 and this is a wave 2. Okay, that would make sense perfectly for many reasons, but mainly because it explains the slow pace of this move to the downside. Although impulsive, it has the volume and the momentum of a progressive corrective move rather than anything else, and that is usually a wave 1. Okay, so that would explain it. Now the wave 2, in this particular case, guys, we're looking at the white ones here, could be done at 62, or maybe again we're going to see this moving higher since it's going to be a wave 2 as well. And usually waves 2 in cryptos tend to be very deep. The other scenario, guys, and as you can see, obviously here I'm calling for an ABC, right, rather than a W, X, and Y. So the W, the X, and the Y would be here. So ABC, the fourth is done, we'll go lower. Or there is also an alternative scenario. If this is going to be an A, then we might as well just have a B here, which means we're going to go up as 1, 2, 3, 4, and 5. But this time, they move to the upside. Instead of Y, which would be an ABC, a flat, or a triangle, it's going to be a 5-wave impulse or a 5-wave motive wave, which means only, of course, and then the diagonal. Of course, you know, we might get a leading diagonal here in the beginning, then 3, 4, and 5. Who knows? But anyway, this is pretty much all there is for Bitcoin. And if we just pull a little bit further out now for the more of the, okay, I need to make some corrections here. But anyway, we go with the main scenario. That would be the fourth. In case, guys, we go and fall. Hold on. Because we need to take this into account because we're near to that level. When we go, if we go down to 18K, which is a very important level, by the way, this is going to be a case where a flat scenario is going to become a bit more likely because that would be an ABC. That could be a W, X, and Y, right? And we get 1, 2, 3, 4, and 5 for wave C. Okay, and from there we'll go down. That is also something that we need to keep in mind. So 18 is an important level. And don't forget, if this is going to be a flat, yeah, we might as well just go all the way down to 1632 and still be in wave B. Okay, which means what? We would see something like this. ABC, ABC, 1, 2, 3, 4, 5, and then down. Okay, good. So our job is done on Bitcoin. RUNE. On RUNE, guys, there is of course the main and the alternative. Our main scenario, and that has been for a while, has been a case where this is a W, X, and Y, and wave Y is going to be a simple ABC. Now, we're looking at this as an A, as a B, and 1, 2, 3, 4, and 5 supposedly. So like down at, hold on, and we're gonna see if there is any clusters. 77 or like 80 cents, let's say, becomes a level. The next level, W and X, is down at 31. I'm not saying we're going there. I'm saying there is a very good clusters. These clusters, guys, like act as magnet zones. So it's very important to keep an eye on those in case things turn very bad. Okay, so 31 cents, 30 cents. Now, if we use a different combination, this is the A and the B, for example, you know, we didn't even get wave one here for a W, but we can still use the same sort of thing, because here's what you need to think, guys, that not everybody, all the traders use the Fibonacci tools the same way. Okay, so there is some traders that use them their way, and obviously that's not the right way in our case, but look, like 72 becomes a level again. So we need to look to use the Fibonacci any way that we think a lot of people, the majority of the people would be using it. This is how we identify good levels. And of course, then we need to take the A and the B. Okay, and again comes down to 31. So 31 again becomes a level. So we've got 80, 75, 80, and 30. Okay, these are very important clusters, guys. Okay, now the bigger question, if this is 1 and 2, to do 3, 4, and 5, my 3 needs to go down to 63, and then my 4, my 5 down to 46, supposedly. If, of course, it's going to be a, you know, an impulse to the downside. So my thinking is that if we move lower down, yeah, and you know, we're going to see something like this, stopping at 1 and correcting higher, we want and we prefer to see an overlap between 1 and 3 and call this an ending diagonal. Why? Because the 46 is very low. Now, what I'm saying, what we want, what we prefer is for a bullish count, right? I'm not biased in any way. I am just speaking out for those who prefer bullish count. This is what you guys who prefer bullish count, or you're in or DCAing, need to look at. In case we go lower and stop at around 1, you want the move to the upside to come above this previous wave. Okay, that will give us lower chances of moving lower down, right? So we'll probably stop around 80, okay, and then move up. Now, one of the other scenarios, someone might say, dude, look at this, we have 5 waves, so we're finished. And that's going to be 1, 2, 3, 4, and 5. Yes, you're right, it could be possible, but it is unlikely that, unlikely, not impossible, right? Unlikely that our wave C versus our wave A, it's only correcting down like less than 50%. So usually wave C is equal to wave A. Okay. So with this particular view here, we look at A and B, look where that comes, around 116. Okay, so look at this. That would be the perfect combo. No, just below 116. We don't need to go to 1, but you know, we can stop at 80 since it's a cluster. Okay. If you, by the way, compared to the previous video and made a change in here, because I was looking at this as A, B, and C or something like before with an extended, but that makes a bit more sense with the new structure, of course, to make changes. And this is very important. Now, let's not forget we're outside the base channel, guys. It means we are bearish. Okay, without breaking above that previous high at 250 or so, we're bearish in the longer time and medium term and any time you want. Now, above 142, maybe we're going to consolidate. Okay, maybe we'll stay here for a bit longer. Okay, let me show you. We don't need this any longer. The alternative. An alternative view, guys, is, and I'm going to go in the short term in a minute. An alternative view is that instead of W, X, and Y, yeah, we have an a B as a running flat, and a wave C. Yeah, that does not really change much of the short and medium term outlook, but it does change a little bit the long term, because the W, X, and Y situation sees a more downside because there is more chances we go and do something like this. But in this case, guys, okay, because this is an A and we need to measure according to this structure, right? Look, our 100 for A and C is already finished. So we can consider this as a false break or even the end of it, because we don't really need to, statistically speaking and according to guidelines, move lower down. Okay, so this scenario coming in, it's a scenario that says a bit more likely that we're going to continue higher from here. Okay, because 1, 2, 3, 4, and 5 being done is different to A, B, and then needing and C that is going to be elongated. Okay, I'm sure you understand that. So I need to mention that. Now, regardless, that's the one I was looking at right here. So we've got the 5 and we'll go up. Regardless, let's look a little bit more in the short term here. What's going on, guys? Okay, so the idea is that this is wave 1 and this is wave 2. Yeah, and now we're going down in wave 3. We've only just started wave 3. We do see a lot of volume coming in here. Okay, when we see volumes increasing, there is two reasons. There is a good support or there is increasing selling pressure. To me, that looks like there is increasing selling pressure, which means it makes it probably the beginning of an impulse move to the downside. Now, also, the A and B, we have done the 62% correction. Okay, and that makes perfect wave. First wave, perhaps even maybe it's not finished, because I am assuming here 1, 2, 3, 4, and 5, but I do not like this looking like an ABC. Okay, so one case is this, the other one is that this is 1, 2, this is going to be something like 1, 2, 3, 4, and 5, or 3, then 4 and 5. That's going to be our 1. Okay, so yes, both scenarios indicate that there is more downside. In the short term, however, we either get something like this, okay, or we get something like this. Okay, now, truth be told, and as long as we are above 62, because this is a cluster over here, guys, around 170 or so, yeah, there is also chances that we'll continue up. And that doesn't necessarily mean we're going to go up and up and up and up and our fifth finished here, but it can mean both. One is that the fifth finished and we're going to go up. The other one means that we are correcting still. And that's an ABC, which is W. That's going to be something like an X, and we're going to get a Y. Okay, equally, ABC, ABC, and 1, 2, 3, 4, 5 for a flat, and then we'll go down. We cannot have a triangle. Supposedly that's a wave 2, unless if we're going to get ABC, ABC, and then 1, A, B, C, D, E, and then we'll go down. So as a W, X, and Y again. And what else? Well, pretty much that's all. Now, to the upside, yes, it's possible that we have 1, 2, 3, 4, and 5. But it looks like more of a case that, you know, this is an A, B, and a C. Okay? Since we are looking for waves 1 and 2 being done, we need to draw our feeble or base channel here again, as always, and wait to see how do we fare. Okay? How prices fare versus this channel. So as long as we are in this base channel as well, the medium-term outlook, it's bearish. Now we need to look at 2, we need to look at 170, and lower than that, we need to look at around 144. Okay, so that's going to be all for the day, guys. Let's not also forget quickly, we might still be correcting, right? So as I said, hold on, before we go, that's the expectation here. So 2 becomes a very critical level to me, and that looks like an ABC so far. So one more ABC for W, X, and Y and wave 2 will not be a surprise. Next level above there is around 220. Okay, also a big cluster. Okay, and is going to also give us a rejection at the base channel again, which would increase the momentum to the downside, of course, following a rejection up here. Okay, and it would make more of a better case for a wave 2, since, as we said before, they tend to be quite deep.